international publicly traded company on TSX with over 30,000 customers and client bank locations. FCE Corporation was part of a friendly acquisition by Bank of Ireland Group in 2003, and Mr. Pinna remained in his role after the acquisition until October 2007. At Bank of Ireland Group, he was promoted to being CEO for their North American foreign exchange business and was one of the five executives on Bank of Ireland's US Supervisory Committee. Mr. Pinna holds a bachelor's degree in finance with a focus on international business from University of Central Florida. He has more than 25 years of experience in international banking with an expertise in foreign exchange. Thank you, both of you, for taking out time and sort of participating in our conference. Randolph, I know you're on the West Coast, so it's super early there. So we really appreciate your time and being with us and being with some of our investors to share your thoughts. So I will hand it over to you for your presentations, following which we will have a question and answer session. Thank you.
Thank you, and good morning, ladies and gentlemen, for joining. Thank you. I'm going to go ahead and put a deck on the screen, if I may. I'm not the best at page flipping, but I'll do my best here. And thank you again for joining, and thank you, Stephen, for joining as well. For those that are not familiar with CXI, I wanted to make sure, before we get into the details of our group, that what you understand is our offering. What we do is financial services. We do focus strictly on foreign exchange activities, which is processing of cash, execution of international payments, which includes check clearing. Our spot transaction and forward transactions is our main focus for the next 3 years as we attempt to continue to diversify our revenue streams, as cash historically has been the largest revenue generating service that the business makes. We do this through our own proprietary technology, which is CEIFX.com and EBCFX.com. This software was developed in-house and remains in-house, being modified and improved each year as changes happen in the industry and as our customers grow and diversify. We do this, again, centrally in each head office. In Orlando is where we host our servers as a backup, because our primary servers are in Philadelphia. And then we have also a redundancy situation in Toronto, Canada, and as well as a backup in Mississauga. We do this through our customers are primarily financial institutions, banks, financial institutions, which include credit unions and money service businesses, and also corporations that have international activities. In the US, we also have our own direct-to-consumer division where we operate 35 retail stores, mostly in shopping malls, as well as online FX, which is our online store, allowing us to ship currency to businesses or homes in 26 different states where we're licensed. We also have what's called inventory on consignment with agent locations, where we have locations that pay rent and payroll at their premium retail outlets while utilizing our software and technology and our currency. In many cases, even our license, to provide a true partnership where we can provide consumer services without the cost of rent and payroll. This gives you a flavor of how our current revenues are mixed. You can see the difference between financial institutions, money service businesses, as well as corporations. The corporations has been our biggest focus in the last year as we continue to diversify away from cash. Not that we're abandoning cash. However, the world pandemic has caused cash to really diminish, and therefore our focus has been on growing our international payments business with corporations. As the history, I think, was already done here at the beginning, there's a more detailed play-by-play, so to speak. The biggest news was when we acquired a business in Montreal, which has been very strategic for us, because it not only added a book of several hundred established good regular customers, but it also brought an established team of experienced FX bankers that have complemented our growth. Since then, we've actually did a nationwide hiring spree and looked for some key people. And luckily, several people have applied, and we have expanded our sales team, and we continue to grow our corporate business. Most recently, you may have heard in the news that we also in the US have done an integration, or we're doing an integration with Jack Henry Associates, which is a software provider to banks. And we'll get into that later. But this is the history that brings us up to where we are today. We have a very experienced team of people. Steven's here joining us, and he's one of the newer folks, been with us 3 or 4 years. But a lot of our people have been with the company for close to 20 years. In the US as well as in Canada, we've only operated as a bank now 5 years. So of course there we have a younger team. Our directors are very solid. If you check them out, you'll see we have a real good roster of directors. We have a very experienced compliance team, risk team, and we feel we're very well structured now, even after our restructuring that occurred part of the pandemic, where we had to consolidate roles, where we now have one COO, Matthew Shillow, operating all banknote activities for both the bank and for CXI, and Wade Bracey, who's leading the payments business for both the bank and CXI. This is a COVID slide, which I think we've all heard the rules, and what we're doing is in line with what is recommended, as well as the government's recommendations. Even still,
I think Randolph.
Bad loss last year. We continue to remain very strong. Can you guys hear me? Locations like Duty Free America has duty free stores both in the northern border and on the Mexican border, and we have been able to get these locations doing currency exchange services without having to pay rent or payroll. I mentioned about our hiring. We have been very successful in bringing key people to the organization, and that's been led by James Devenish, our head of sales for Canada. And despite the COVID, we've continued to add a lot of new customers. Partly, this has been fueled by our larger competitor, a company based overseas, have fell down during the pandemic. They did recapitalize their business, but the caveat with the finance was they exited the Americas. So they have closed their Canadian business, their US business, and their operations in the Caribbean and south of the US border. That has helped fuel additional customer growth, which is going to be very good when the world does finally reopen. Mentioned that
I think we lost connection there. Randolph, can you hear us? We'll just give it a minute so that he's back. Yeah, I'm sorry about that. I think Randolph sort of had his connection fall off there. We will just give it a minute so that he can join us again. Or if Stephen, you want to continue the presentation, it's your call.
No, I think we should wait. He has the master document. I have it as a backup, so I can load it if necessary.
We can give it a minute. He should be back.
Yeah, he's in California I think in a hotel. So that's probably why the connection is in and out.
You can never be sure with the technology. So
no, unfortunately not.
I just texted him, but since we're waiting for him, I will just see if there are any questions that
Yeah,
we.
there is
Yeah, so there is.
one.
I see a question there. You might, Nishida, want the
Yes.
question, please.
Yeah. Jeff, can you just unmute your mic to ask the question?
Jeff, can you please unmute? You should have that option to unmute yourself and then please ask the question.
He says
I
he has no
don't think he has
questions
a
for now.
question. So,
Yeah.
but just going on the theme, Stephen, that Randolph was talking about, that you have done a partnership with Jack Henry banking vendor. I'm just wondering how the integration program, you guys think of it. There's also, whenever such integration happens, there's a risk that the data integrity gets compromised. So how are you guys thinking about that? And is that something which is sort of the focus area right now?
Well, first of all, these integrations are with large companies that are dealing with multiple banks, multiple FIs, all who, like us, have pretty stringent security requirements. So that on that side of things, our IT people work with the IT people in the integrator. So we're pretty confident along those lines that that's not a problem. What was the first part of your question?
The data integrity is also very crucial and critical. So is there a risk that
Yeah.
when you integrate, some of the data sort of gets compromised, or is that all fine?
Is there a risk of losing the data? Is that what you said?
Yeah, yeah.
Or being corrected? No. These links are established, and so the data that's flowing back and forth is really it's payments transactions. So it's a bank, let's say, and that's on that platform, has a client that needs to complete an international payment, and they choose us to do that transaction with. So it flows along those channels very smoothly. I mean, part of the integration is testing all of that, of course, to make sure that the data integrity is maintained. But once it's set up, we have one already with another provider, and so we have some experience with this as well. So the second relationship with Jack Henry is going more quickly and more smoothly than the first one did, because the first one was more of a learning for us.
No, that's fair. And generally, I would say that in some ways, and correct me if I'm wrong, but you've had success that you could easily sort of put your software with some of the clients as well. With this new platform, how does that changes? Does that improves it, or are there? What are some of the advantages, or what are some of the competitive advantages that you get out of it?
Well, actually, the advantage of it is that it doesn't require that the customer bank use our software. They get access to it through this integration, whereas with our individual bank clients, most of them use our software to execute transactions. So this actually expands the market that we can operate in, because it's not that loading our software is a difficult thing for them. It's not, actually. We make it very easy, but it just expands the available market, because we're getting access to banks or financial institutions that would take us a while to get to with our own marketing efforts. So the link with our software is through the integration with the service provider, not directly with the financial institution.
No, that's fair. And generally, more of a sort of broader question when we think of it, there's a lot of concern on the security side, and some
Mhm.
of the other financial institutions, they put in a lot of investments towards making sure that their platforms are pretty strong. So I would think that you have to sort of maintain a balance that how much investment you can sort of do it on the technology side to make sure that you're well secured. So how do you think of that? Like, is that something easy to manage, or is it one of the biggest challenges that you have right now?
Well, cybersecurity is probably the biggest challenge for any organization like ours, where we have data that we need to protect. So it's a really high priority, and it's a regular discussion topic both at the board level and at the management level to make sure that we've got the maximum protection that we can have on our applications. So, and we do SOC audits, we do security reviews regularly. So it's a high priority item. One advantage with the proprietary software is that we are able to we're much more confident about what we can do with it than we are if we were using a third party, for example. So it's a very high priority.
But is it, if when you think of it, like, has your investments toward making sure that security has that increased a lot over the years, or the budgets for that have sort of remained pretty much stable over the years?
No, it's we spend more on it now than we would have, say, 2 or 3 years ago, because it's a higher risk than it was 2 or 3 years ago. You can read it every day in the press. So security of data, cybersecurity is we rank it as the number 2 or number 3 risk in the company after AML concerns. So and we rank it that way so that we treat it accordingly.
And just picking up from your answer there, when you mentioned that AML is the biggest risk,
Mhm.
how is the sort of regulation surrounding it? Has that sort of improved, or is that has continued to increase, and that's an additional cost that's coming up?
Well, the AML regulations are evolving constantly, so we just adapt to that. But the regulatory regime overall it doesn't change quickly. It evolves, like I said. So it's the biggest risk just by virtue of us dealing in what we do, which is financial payments, transactions, and in banknotes, cash. So the requirements that we have to meet are fairly high and stringent, but we've just built that into our processes in Canada with the bank. Part of the reason we had a large buildup in expenses in the prior 2 years, in 2018, 19, and even in 2020, was because we were building out that whole risk infrastructure, and which included, just in OSFI's terminology, it's the second line of defense. It's really oversight roles in risk management and compliance, and so that it has been expensive building it out, but we're stable now. So
when you mentioned about the AML, at the same time, you've recently announced that on your platform, cryptocurrencies are an option that can be used, right? So I'm just thinking the regulatory framework around cryptocurrencies, how is that sort of playing out? Is that, are you guys comfortable doing that?
Well, yeah, so that is currently a pilot in our US operation. It's not in the Canadian operation at all. And it's serving, and it's in our retail stores. We are an agent. We are not actually taking ownership of the cryptocurrency. So that's someone else. So our compliance requirements are, because we're essentially taking fiat currency, US dollars primarily, in exchange, and we're selling them someone else's crypto. So we're not the compliance requirements for us are essentially the same as with the banknote operation. So we're not in the owning the holding of cryptocurrencies in so-called inventory. It would be a little different, but we don't do that. It's strictly an agency relationship. It's a pass-through.
Yeah, no, that's it. And just when, like, how different is that from your commission business? Is that I know you said it's in a pilot project, but is it something that's like from a margins perspective, is that the business that's lucrative or not?
No, it's lucrative from a margin basis. Yes, it's not high volume at this point, but the margins are higher than. It's more like rare currencies. Those spreads that we would make on things like, say, the Iraqi dinar are higher, and similarly on crypto, it's cryptocurrencies. The spreads are higher.
Fair enough. And so you're doing it right now in USD in the US.
Mhm.
If it turns out to be a success, is that something that you will eventually roll out in the Canadian market in terms of Canadian dollars as well, or no?
We have no plan whatsoever to launch it in Canada. It's a different level of acceptability in the financial services sector here. And we, in Canada, our business is strictly wholesale. So we don't, whereas in the US, we have a wholesale business, but we also have the retail direct to consumer, and that's where we're selling it. So there is no intent to bring it into Canada.
Okay, well, that's fair. I just wanted to check if we have any questions from the audience. Nishita, if you could check, I see there is one hand raised. If there is a question, you can take that.
Jeff, you can ask the
Hi,
question now.
Can you hear me, Stephen? It's Jeff.
Yes, hi Jeff.
How are you doing? So
great.
one of the
How are you?
things that I know it was going to come out in the slides, but over the course of this last year, despite the pandemic, you've sort of increased your addressable audience in terms of, call them doors or transacting locations. Can you just give us a little sort of idea of knowing the fact that there's not a lot of business right now, but there's a lot of potential business coming. How much bigger did the footprint get with TravelX and with duty free in the South, et cetera, just to understand what the business could be if there's a recovery?
Yeah. So we estimate that the base amount of business from where it was, say, a year ago to now, with all of the additions, is roughly 15 to 20% higher.
And so let's pretend it's going to take a while to get back to normal, but and even if there's reluctance of people to use currency, the base is that much bigger, and you have so many more transacting locations that you should be able to get back in time to where you were. Is that a fair guess?
Yes. Yeah. I mean, we've consulted with people in the travel industry, like IATA. We've talked to people at Pearson, for example, to get an idea of how they're looking at things, because ultimately that market, that foreign currency banknote market, is driven by travel patterns, and they're pretty much. This was about 8 or 9 months ago. And they were pretty much on the line of thought that it would take 3 to 4 years, and to get back to 2019, which was a record year for travel. So we're more or less, we've built our model around that expectation, but with enough flexibility that if it comes back more quickly than that, and like I said, we have a higher base. So, the growth rate, the return should be a little quicker for us, all else being equal.
Right. Thank you.
Thank you, Jeff, for your question. I don't think Randolph has still joined us because of his.
Yeah, let me text him and just see. Is there a number he can phone in?
think I will have that sent out to him.
Am I muted still or unmuted?
No, we can hear you.
So I'll ask you one more question then
Sure.
that maybe that helps. Is the payments business, what you I know that you've hired some new people. What's the sort of because it's growing very, very nicely and it's becoming a more meaningful part of the business. What's the go-to-market strategy in terms of getting out there with the sales force and showing these sort of small, mid-sized businesses that there is a great reason to switch their international transfer business, or however you want to describe it, how do you actually get in the door?
Well, the value proposition has two key parts to it. One is that we are a bank, not a money service business. So that gives them some faith and confidence that we have a good housekeeping seal of approval. But beyond that, then what we really differentiate is that while we are a bank, we're not like the big banks. And we've done market research that shows that in this part of the market, small and medium-sized enterprises that are engaged in international trade, that they really feel underserved, that they have no one they can talk to. When they do their FX business, it's strictly through an electronic channel, and they don't get any input. So the way we focus on rather is telling them that we can't advise, per se, but we can give them insight into the market, and they don't get that from big banks. We don't have the infrastructure that the larger banks have, obviously, so we're able to offer that in that segment, and so it's resonating. The two sides of it, they're dealing with a secure institution on the one hand, and they're able to get some market insights that they can only get by reading the Globe and Mail or subscribing to online newsletters or that sort of thing. So
because they get no access to any intelligence, is what you're saying, when they're
Correct.
just a small mid player. So
right, because they're relatively low volume. They're not an institutional client, so they don't get the personal attention.
And the old Cambridge bill payments game plan, which was very selling intensive, get out there, build up the business, is that sort of, except you have a bank which gives you more legitimacy, is that kind of the game plan? Because what did you tell people roughly how big that business is inside of CXI now, the payments business?
Sorry, what was the last part?
Do you tell people how big it is inside of CXI now, the pure payments business unto itself?
Yeah, well, we separate it out in our financial statements. Maybe I'm not understanding.
And so, I mean, no, is it a $5 million business now with the Montreal acquisition?
Not quite, but
getting there.
It could be by the end of the year, but it's progressing well, Jeff. That's what I can say. The base in that Montreal acquisition is around $1.5 million a year. So that's a kind of a starting point. And we already had about 600,000, 700,000 as a base. So the starting point is between 2 and 2.5 million. And with the additions that we're making in our sales team, it'll go up from there. So I'm not sure if that answers. Does that answer?
Yeah, that did. It did. Yeah, thank you.
I think I missed the first part of you had a first question there, though.
Well, no, the first part was, are you following the Cambridge bill payment sort of game plan, which is to build the sales force and get out there and.
Yeah, that our first foray is that's the first leg of the strategy. But we will get into electronic channels and building those out as well. But the first part of the strategy is really to build a reputation for ourselves and get feet on the street.
And what does the Fed integration bring you? I don't think the world gets that too much. Like when you actually can, that there's a saving, but there's also another level of sort of legitimacy, isn't there, with the what you're getting with the U.S. Fed?
Well, with any central bank like them, the opportunity is to expand into international markets. This is for banknotes. It's not payments related. It's banknotes. There's large demand, and so let's take that example. Large demand for U.S. dollar mint notes, and the main provider globally is Bank of America, and so there is demand. We're already seeing it from banks that would prefer to diversify and away from just one major supplier. And on top of that, we can sell mint CAD banknotes as well, and there's demand for that. So in Europe, in the Far East, and in South America, Latin America, there's plenty of opportunity. And so the advantage of a relationship like that with the central bank is that it's you can get the volumes you need in mint, especially it's mint that is particularly important, new notes. And it's an easy or a more flexible depository. So we can handle much higher volumes than we would have otherwise on our own, because we can ship directly there and deposit the notes there without having to bring them into our vaults, process them, and then resend them. So that's the advantage of a relationship like that. And in Canada, we're not large enough to have that relationship with the Bank of Canada, not yet. But we have reliable banknote providers in the large financial institutions here. So we're able to access mint CAD banknotes through that channel.
I think we have Randolph back with us.
Yeah.
Sorry about that. I think there was some connection issue there. So
Sorry about that. I even paid for the premium, paid extra than the regular internet. I paid premium price, but the hotel just had an issue now. The front desk confirmed. So I'm using my phone connection. So hopefully it works. Okay.
No, we can hear you and see you fine now. In fact, we took the opportunity and took some questions from the participants. So if you want to continue with the presentation, sort of, that's fine.
Yeah, hold on. I got to find it now. Hold on. 1 second. I open it. Okay.
Well, while you load that, I see that, in the chat, there is a question which says that, how big is the TravelX opportunity? Have you proactively taken advantage of it already?
So the TravelX opportunity pre-COVID, they were generating close to $100 million in North America in revenues from both their retail operations, which was primarily airport locations and some select mall locations, and as well as their wholesale customers, which were banks. So that now, obviously, with the COVID falling down, those numbers are way down as well. But we have, as I said in that earlier slide where I was showing you that we picked up some business for customers from them. We have picked up a lot of their wholesale customers. And we're very soon going to be picking up some of the retail airport locations through a partnership. We're not paying any rent or any payroll. It is through a partnership that they had in place with a minority owned business. And so we do think we can get a percentage of this number. Exactly what number, we don't know because we've never operated in an airport like JFK. However, we do think it should be quite lucrative since the revenue share is favorable for us. Hopefully that answered it. And I think I've got my deck up. I can't remember what slide I was on.
I think we're on slide 9.
Okay, perfect. Now let me just
If you
share
want,
this.
I can put it up on your behalf as well.
No, here, I got it. I don't, the one that we loaded, I think I had a little fresher one.
Okay.
So let me just share this screen there. So that's the slide you said I was on. And so I was just explaining the ownership before. Now this is one of my favorite slides here. The reason is this really illustrates why banks, some of the largest banks, both in the US and Canada, have selected our group for doing their service. And it's basically because our competitive advantage is the technology. We built this in-house. The old system that I had when I was running the currency exchange for FCE and the Bank of Ireland group was all around the currency exchange, the foreign exchange activity, and the customer data sat on the side. Whereas when we redesigned our software after we left Bank of Ireland, we recognized, we spoke to regulators, we spoke to customers, I spoke to our own employees, and we all knew that the world had changed to everything being circled around the individual. And so the customer activity is in the center. What they do, buying currency, selling currencies, doing a wire or processing checks, anything like this is around the actual customer activity. And so we've developed our own proprietary compliance engine. It's titled CVS, Compliance Verification Systems, and it has several elements such as the live stop feature, which keeps track of clients' activity live. They call it live aggregating of totals. So that way, every time someone transacted, keeps track of it in a consolidated basis. So if I exchange money at one branch in Toronto and fly to Vancouver, this information will be kept live in real time. And this has kept us very competitive with the other people that don't have this live aggregating of totals. They do overnight aggregating, which may mean tomorrow I have to file on a report yesterday because I recognize a client had violated our policies or exceeded our dollar amounts that are required for reporting, and hence we have to now report. Whereas our system will stop the transaction live, get the additional data, and allow for it to proceed, or if they've at their limit, will keep the customer from transacting over certain limits. This is definitely one of the secret sauce of our business, the special recipe. This is the most important slide, I think, is because what we've been talking about up to now has been historical. This is where we're going forward. These are the four main pillars. And then the fifth one at the bottom where it says strengthen and optimize corporate culture. This is really an essential part for us to ensure that we remain structured. So what are the four things that are going to keep us and get us back to where we used to be and beyond is focused on both banknote activity and payments. I will start in the upper left-hand corner where it is our core business of servicing banks and credit unions across North America. And we're doing this now through integrations. I started talking about that when I mentioned the Jack Henry integration. I will look historically and remind those shareholders that have been watching us that we did integrate with Fiserv. That is the largest software company in North America. They write a lot of software, core checking accounts, saving accounts, internet banking, all of this. And Fiserv had their wire version of their module called the Wire Exchange. And while that's integrated with the Federal Reserve for domestic wires, they have integrated with other financial providers like Wells Fargo Bank, PNC, Bank of America. We are now one of those providers. We're the 9th provider on their integration list. And we did invest quite heavily several years ago into that integration. Since then, that business has been profitable. We continue to reap the rewards of that integration and that relationship. And hence that really supported when we redid our strategic focus, that the integrations with core systems where we can allow for a straight through process, STP. This allows them to have one provider, CXI, utilizing one platform, their core software where all their account holders have their money, but get all the bells and whistles of our software because of our integration. And again, that this has been proven already with the Fiserv. And the nice thing with Jack Henry, we are going to be the first integrated provider, because right now they've always just done this through the dollars, through Federal Reserve integration, and not allowed their clients to have an international relationship. So this is going to be, we think, even more profitable than the Fiserv relationship. This allows us, again, to get banks, credit unions to use their core, but still use us, which eliminates having two systems. Currently, if you're not integrated with us, then you have to toggle between our system to do the transaction with CXI and then your own bank core system to debit and credit. And by doing this integration is definitely going to allow us to quickly add more banks and eliminate back office labor, everything. There's a lot of advantages to that. The next one on the right-hand side, global expansion. I think when I got on, I heard Stephen talking about mint notes from the Federal Reserve. There's no doubt a need for a global player in foreign exchange. As some of you that have been around know, that HSBC used to be the largest wholesaler, but they made a strategic decision to exit that business after they got in trouble for having what they call blood diamond money or something, and the CEO of the bank exited that. In fact, we now service HSBC USA, where they exited and outsourced to a better provider. There is, because of the large competitor that fell down, they've also exited global wholesale notes, and so there's less competitors in that space. The real catalyst there will be when we open our bank account at the Federal Reserve Bank of New York, where we can source dollars at zero cost. So right out of the gate, that's a savings of roughly $1 million a year, because we currently pay about 10 to 15 basis points on our US Canadian dollar transactions, which is quite a lot. Even during the pandemic, we processed close to $1 billion US. And by sourcing at 0 basis points, that's going to save us $1 million. More important than that is that we are getting large established banks already applying to Exchange Bank of Canada to allow us to sell them bulk dollars. Our offering, compared to some of the other global players, which Bank of America is the most dominant, is that we can offer both fresh dollars from Bank of Canada and from the Federal Reserve Bank. So we'll be selling dollars both. You can have both Canadian and US. So red dollars or green dollars you can get in bulk from Exchange Bank of Canada. CXI is also, even in spite of not having a direct Federal Reserve relationship, is also expanding into accepting customers from international areas because of again, the Caribbean has seen a need with other providers. Again, one provider has left. Another major bank has been retracting somewhat from some of these islands. As you know, the Canadian banks have also been backpedaling from the islands. We feel with our software and our experience in our Miami processing center, we are best positioned to really expand south. So both businesses, the Exchange Bank and CXI, will continue to see expansion internationally. And I want to reiterate, I was in one conference call and people said, oh, you're opening an office down south of the border? And we're not opening any offices. When I say expansion, it means we're accepting customers from new jurisdictions. Our group is not planning on having any physical office besides what we have in the US and in Canada. So to the lower left, this is in both businesses, very focused on Exchange Bank of Canada with direct corporate relationships. These are small to medium-sized businesses. They can range from, a couple $100 million to billions of dollars in assets on their balance sheet. And we may even have some smaller customers than that. But our sweet spot has been the small to medium-sized international businesses that manufacture things locally, sell it globally, or sell things locally, but source their product internationally. And so there's payments either receiving or sending there. And this has been proving to be profitable and is really going to help Exchange Bank of Canada finally add profits to our group, as opposed to the last 5 years where it has been a cost for us to get the bank where it needs to be. So you'll see that growing, that you saw in the first quarter results, that our payments growth was up significantly. That trend we expect to continue. Again, in the US and Canada, because of in the US, we will be continuing to integrate with financial institutions using like Jack Henry or Fiserv. That'll allow for payment growth there. And then in Exchange Bank of Canada, we'll continue to expand our corporate relationships and also look for any integration opportunities that we see. Lastly, the fourth pillar to drive our revenues to record levels is our consumer offering. I already spoke a little bit about that, how we have our own fleet of stores, 35 of our own company stores, and future growth will be through partnerships, such as I was mentioning with the airport opportunity that's at our doorstep, as well as with duty free and other select retailers, including a grocery store chain based in the South that also has a money service desk where they do Western Union, they do check cashing, and are finally considering currency exchange as well. So we'll continue to expand our consumer offering through our online store and through select partnership locations. And then lastly, I mentioned the strengthening. We're going to be upgrading our GL system, where we are continue our CRM, our customer relationship management system. We may be upgrading that as well to really allow for the structure to grow our business, both top and bottom line. Our mission statement and vision statement have been simplified and made very clear, that we do have a focus on making foreign exchange simple and secure by utilizing our technology, our experience, and our high level of customer service. So again, I think we've talked a good bit about this. We are, as I said, we're focused on upgrading our core system. We've always been very focused on cybersecurity. That remains, as a fintech company, remains a top priority and a top focus for us. We've already expanded here on the services with US banks. This is going to be through these integrations. Talked about this with the corporate international payments. There's a lot of businesses, a lot of these Canadian companies especially have their accounts with their primary big banks in Canada, but they see the value of doing their foreign exchange with a specialized bank, Exchange Bank of Canada. The international banknotes we've already spoke about, the fact that the Fed is very close to approving our account. We see ourselves having a very strategic advantage with that relationship. Okay, my screen froze, hold on. Sorry. There it goes. Talked about the consumer. Again, the agents is really what's going to be growing this business over time, as well as our online presence. We did add other product. You may have saw a press release. We are now in select locations selling Bitcoin and Ethereum. That's a new product. We are not inventorying this. We are just an on and off ramp. Basically, we are an agent of an established global crypto exchange based in the UK. We're dealing with the New York office. And again, we fall under their license. So all we're doing is accepting US dollars, passing the customer data and the dollars to the exchange. The exchange passes digitally the crypto to the client, and we make a commission. This is a first step into it. We are working with our auditors. In Canada, currently, our auditing firm does not do audits for publicly traded companies that inventory crypto. They're having a challenge currently to figuring out how they will feel comfortable validating that. So in the meantime, we have to be an agent. We do intend to look further at this. Our innovation committee has been looking at adding stable coins, which is very different than just owning a crypto. And most importantly for us, long-term vision is to see how we can be working with the central banks as banks slowly change from fiat paper money into digital, what they call CBDC, central bank digital currencies. You may have heard China is one of the first countries that have already issued out several $1 billion worth of renminbi, digital renminbis. And our vision is to be able to be that global digital exchange where we can take a digital renminbi and convert it for hopefully soon a digital dollar. The Federal Reserve Bank of Boston has launched a digital dollar project. It's very, very early stages. Canada is a little even slower behind that, but they are talking about it. And we are trying to position ourselves as a specialized foreign exchange provider, a currency provider, that we are well positioned to take advantage of these changes that are in play. But lastly, I just want to remind all of you why invest in us. If you look at our business, you can see that we have a lot of cash. If you're good in math, you'll notice that we trade in Canadian dollars, but those dollars that you see on this screen are in US dollars. So we're trading, I think, under book, which is, that means the value of our company and all of the software and all of those customers are worth less, is clearly not in line with reality. We do plan on utilizing our capital to expand in our core areas of foreign exchange. That could even possibly include another 1 or 2 tuck-in acquisitions. Our technology is one of our key components that separates us from the rest. We are, again, now the largest non-bank retail currency exchange in America, since the largest is now closed. And we will continue to maximize our position for our shareholders. And we continue to have a lot of growth potential going forward. And that concludes my presentation. Again, apologies about my internet connection at this hotel. And I'm happy to take any calls, or Stephen as well.
Yeah, no, thank you so much. I really appreciate it. Both of you for taking out time. Randolph, I know, like you mentioned, you're on the West Coast, so it was pretty early. Really appreciate your time. And just in the interest of time, we'll have next presentation, but if anyone sort of wants to get in touch with Randolph, they can do it either through us or they can sort of do it themselves as well, but we're more than happy to connect them as well. So once again, we really appreciate it. Thank you for taking out time. We also like to thank the attendees who were with us. Our next presentation will start shortly, and this concludes this presentation. So once again, thank you, everyone. Thank you.
Thank you.